Okay, I want to welcome you especially for today's review. We're going to be reviewing the weekly analysis which we took on Monday. We're going to be looking at certain entries which we took and certain decisions we made in entering the market. And this is so that we can be able to get better entries and have a better trade in the new week. So right now I'm going to share my my trading view app so that you can be able to see the illustrations as I do the review. Okay, so these are the various entries which we took. I made sure I kept the various entries that we took. We took many entries this week actually, so it was a very profitable week, and we have a lot of lines, so our charts are quite busy. We'll see how we'll make it less busy this week for easily understanding and clarity purposes. Okay, so this is the 15 minutes time frame, and like you all know, our analysis always starts from the 1 week time frame. And when you put the 1 week time frame, you'll find that we have got so many lines. Okay, so what do we do from this time frame? We look at the trend. First of all, we have to confirm if it's an uptrend or a downtrend. So as you can see, this is a confirmed downtrend. Okay, so and of course there was a counter trend forming here before, which got broken here. So, but we still do the line at the end of every week to see if it will be maintained by the candles. Then we'll know that we'll be looking out for a counter trend if it gets to this point. But then until then, we are looking out for a downtrend. So we also drew another line from this point to confirm this downtrend has been steady for a while. So that's what we do. And then we look at the price action because there was a huge rejection here. That's a price action for us. There's a huge rejection, that's a price action for us. And every structure that is either rejected or broken at this point is price action for us. So every point where the candles reacted or there's a decision in the markets, if it was price action. So we identify that from 1 week time frame. We go straight to the 4 hours time frame. We also look at the trend. Okay, so this is a downtrend, but there's a serious rejection here that's giving us this counter trend. So we use the counter trend line to see if the counter trend can be maintained through the week. And then we also do a line on this counter trend axis to see if this downtrend will be constant during the week. So we also took price action levels. You can see with our green lines. And after that, we go straight to the 4 hours time frame where we look at the two candles that starts the week. How do we identify it? Normally we use the session break, we turn it on from settings, and then we turn on economic event because we do not trade news. We put session breaks on green, we put economic events on red. So it's more like a danger telling you that once price gets to that red line, please get out of the market. So the two candles that began the week is this one and this one. So we're looking at the higher high of it and the lower low of it. The higher high of it is marked with a red line and the lower low is marked with a red line. So from the upward part, we identify as the buy region for the week, and that's why we put this for the downward part, we identify as the sell region for the week. So what it means is if as the market begins to move during the week, price for any reason gets to this level, we will go for a long buys and we will look out for short sells. That's our decision for this. Same also goes vice versa for the sell region for the week. So after which we are able to also look at the trend and we confirm if it's on a downtrend. Of course it will, because from the higher time frames it has been on the downtrend. So the downtrend was maintained, and there is a counter trend actually, which got rejected at this point. So, but before the week, this was just where it was. So it rejected this and got rejected here. So during the next week, we can actually shift this trend line and put it on this port. That's what it means. So after that, we just go straight to, okay, we identify the price action levels. For next week, what we're going to do from our observation is we'll take seriously every resistance and support level from 4-hour time frame. We'll pay less interest to 15 minutes time frame, which is our entry points. We'll pay more attention to that of 4-hour and 1 hour, so that we can be able to get longer trades. Yeah, so we can be able to get longer trades during the week. That's our observation as we do this review. Because if we take price action at 15 minutes, we take at 1 hour, 4-hour, you notice that when price begins to get to that of 15 minutes, you're considering to close that particular trade. Meanwhile, the particular direction, it's the 1 hour and 4-hour, which is the higher time frames to the 15 minutes for a day trader. So, and you might be taking lesser of what you should take. So that's our observation, and I thought to share that during this review. So when you go, we're not going to do 3 hours or 2 hours because they're not very different from 4 hours. So we'll go straight to 1 hour. So when you're on the 1 hour, like I said, after taking price actions from the the 4-hour time frame, we will take from 1 hour time frame. So what do I mean? Not just drawing price action lines, but drawing a block signifying that this is a resistance and this is a support, so that anytime we are taking any trade from the 15 minutes time frame, the resistance and the support level becomes areas of considering to close the particular trade that we're in to avoid any loss. So after monitoring that, of course, you look at the trend as well, which is still on a downtrend. Then you monitor this counter because there's a counter already. You monitor it and look at what the market is doing. Okay, so for the new week, we're going to move our trend line from here to this point, which if it breaks it, then you have to know that market has changed direction, because the counter trend is gradually building from a lower time frames to affect the higher time frames. Okay, so we go straight to, we're going to leave 45, 30. They're not very different from 1 hour. Go straight to 15 minutes. Like I said, we will not take price actions from 15 minutes again, so that we can be able to see the particular direction where price might have a huge rejection. Look at it. Look at what I mean. There was a price action level which we took from the 4-hour time frame on this point. You can see very long because it was my high time frame. Each time price comes to, okay, there was one on top and there was one down. Each time price got to the one on top, it got rejected and came down. It came to the one down and got rejected. Are you seeing? So that means if you take eventually any trade from this point and you put the next price resistance as your take profit, you'll notice that you can actually get all the profit from this point to this point. But if you look, you see that we took this trade from this point and we're considering to close this trade just at the psychological level. But for some reasons, after all the plays that went on here, it was a long buy, you see. So I'm saying this so that we can be able to spot long buys and long sells during the week easily. So the price action for 15 minutes does not blindfold us from seeing the ones that actually mean a lot to our day trading activity. So it got rejected at the one top, got rejected at the one down, and then give a swing. Now look at it several times. Now it broke the one top at a point, right? And retested, right? And did this. But before then, it got rejected at the one below, right? Before it went up and broke this one here. giving you decisions. But during the NFP, the price came straight to that same high time frame of the support and got rejected. So you see why I'm paying more attention now to that. So look out for our analysis for next week, 6 a.m. Monday morning. We would be taking the price action level that's for resistance support more seriously for the 4-hour time frame. We will not even draw at the 15 minutes time frame so that we can be able to catch the long move during the week. Okay, so now we're going to look at how we made decisions for entries from the beginning of the trade. You notice that there was first of all this swing, right? And if you look very well, you see that now the easiest way to spot a W pattern or an M pattern is by changing this candle to a line. You get, so change it to a line. So once it becomes a line, you're able to see the W pattern clearly, and you're able to see the M pattern clearly. If you look at this, you see that this is an M pattern because price came from down, went up, and then did not touch the down again, and then swung for a while before it came down. That's an M pattern. For a W pattern, price came down, went up, did not touch the down again, and swung for a while. That's a W pattern. So because this is a W pattern, what happens after a W pattern? After an M pattern is a bearish move. After a W pattern is a bullish move. So that's the reason for this exact bullish move. So in case you're using our confluences or you're using our factors, which we use in making entries, that's how we use the pattern. Now let me bring the factors close so we can be looking at it while we review our entries. So it's closed now. The first one is trend, right? Of course, this is a downtrend. So if you use your trend line, you see that this is a downtrend. So because it's a downtrend, we would definitely get entries. So anybody telling you, oh, it's a Monday morning, we might not get entries, banks just open, we need to understand the direction of the market. That's the person's own point of view. As for me, as long as the swinging, which is the consolidation moment of this particular move has been completed, I can actually spot my entry. So if you look, you see that when price got to, for that first entry, when price got to the psychological level, it broke, went up, and then it got rejected at this price action. Okay. Now I want to see what this price action will be for 4-hour time frame so that we can be able to ascertain that thing I told you. Let me use a red line to identify it for 15 minutes time frame first before I go to the higher time frame. Okay, so I've just marked it red line. Let me make it 2 piece for a 4-hour time frame. Let's see what it will look like, because I want us to catch long entries this week. I want us to catch long entries. I don't want us going for short entries so that we can maximize our profit. All right, so let me see now. Okay, so the first entry was here, then it got rejected here. So that means the resistance, okay, it's actually obvious. There's a resistance that became support here, even though it got broken by this long bullish candle. That was where market took a reversal, or rather that's where market tested on a higher time frame, but from 15 minutes time frame it took a reversal. So that's why it was significant, because it was coming from a higher time frame. Let's look at what it looks like for the 1 hour time frame. For the 1 hour time frame, it was not very obvious for the 1 hour time frame. It was not very obvious. But basically, oh, this is what we can take for now because the system is about to go off. So we'll not be able to take all the entries for the week. But this is basically what we did during the week, and we took these entries, and most of our entries were accurate. Most of our entries were accurate. So look out for our new analysis for the new week, and look out for the win for the new week. So until then, I'll be expecting you to join our analysis for the new week. Thank you. So see you soon.